Clearwood Paper Corporation is upgraded to buy rating. From a valuation perspective, given the assumption that the current market price is 45.97 United States dollars, estimation from both methods is 44.82 USD under the DCF method, in which the terminal growing rate is 0.9%. And the weighted average cost of capital is 6.52%, and the estimation is slightly lower than the current market price, and the estimated price is 49.39 USD and is 7% higher than the current market price. The estimated price is based on following drivers. First, the diversified product portfolio, which enhances the revenue figures. The strategic long-term purchase, which helps lower cost of goods sold. The integration of supply chain, which helps to lower transportation costs, and the cyclical condition that whole tissue industry is currently in a depressive state. Potential risky factors mainly include the increasing price of raw materials and energy.
In the case of the CLW, the inflation rate in the USA is regarded as an unexpected news to grasp alpha. As shown in the above graph, the inflation rate hit the historical high in June at 9.1%, but starts to decline in July to 8.5%. Specifically speaking, major energy prices start to show downward trend in July, and the CPI is 0.2% lower than expected in July. From the perspective of the revenue, as CPI declines, purchasing power of customers increases. They become therefore less sensitive to price and are more willing to purchase premium products, which is a vital segment of the CLW. From the perspective of the profitability, as price of energy is going down, the cost of manufacture declined, as the CLW relies heavily on the energy to conduct the production, and the cost of transport declined as well.
Treasury 1 Estates Limited is upgraded to sell rating. From the valuation perspective, its current market price is $13.51, which is higher than both estimations from the peer group comparison method and the DCF method, in which the terminal growth rate is assumed to be 2.4%, and the WACC is 7.34%. Through the TWE implemented an integration of value chain, which helps increase the competitiveness of company. The future growth is suffer from the external condition, namely the more intensive competition due to the increasing level of globalization. Risk factors mainly include foreign exchange rate as the business involves of import and export, and the domestic price of wine grapes, namely of the raw materials. The extreme weather in Europe, specifically speaking in the mid of Italy and France, is regarded as unexpected news for the TWE. As the domestic price of wine grapes is influenced by the international demand and supply, due to the extreme weather in Europe, which is main export of grapes, the global grape price is expected to increase constantly. And under this condition, the COGS is expected to increase, and the profitability is therefore affected.